Now the classification of cost, one classification was based on the nature of costs, which are classified as direct costs and indirect costs. Apart from that, we've understood about what is the behavior, the cost classification based on the behavior. They are variable, fixed, and semi-variable cost. Apart from this, um, when it crosses the relevant range, it increases and remains fixed for the next until the next level. So that shows a pattern of steps. Therefore, it's also called as step cost or mixed cost. Okay. Then understood the meaning of yesterday. We understood the meaning of what is a direct cost, what is an indirect cost. So we took a very basic example and then try to figure it out about what is a direct cost and what is indirect cost. Anything which is attributable to a cost object or identified with a cost object was understood to be as direct cost. But then what are cost object also we have looked into. Cost objects are any entity with which cost can be attributed. We call that as cost objects. Cost objects could be cost centers and cost units, a subdivision in an organization. Okay. So if it is based on department, function, item of equipment or activity, we call them to be as cost centers. The unit is whether it is per unit of a product or a service rendered. So then we call them as cost units. We started with the understanding about what is the meaning of absorption costing and how do we differentiate with marginal costing. But we just started, and since you have not covered, it was not a part of your syllabus until now, about what is a cost statement. So we were looking into how is a cost statement prepared, or what is the format. In other words, what is the format of cost statement is what we were um, trying to understand. So I'll take you to the format of cost statement. Just a second. Sorry about that. So what is the format of cost statement? The cost statement has the first section, which includes all the direct costs. So based on another classification of cost also we have covered yesterday, that is based on the elements of cost. So there are three elements of cost: material, labor and expenses. So the direct component of all these three elements of cost, that is direct material, direct labor and direct expenses, Added together, it would be called as prime cost. And then comes the indirect costs. The way in which the indirect costs are accounted is not based on the elements of cost, but now it takes into account what are the functions of the business. So the criteria would now move to what are the functions of business. So production, administration, selling and distribution. These are the functions of business. So focusing on the functions of business, what are the overhead costs which are incurred? That would be accounted for, but because there are many number of overheads which have to be accounted for, it becomes a tedious process. So therefore, what is assumed or what is the regular practice of accounting for overheads is they establish an overhead rate, maybe from the past data or from some other company which is running on a similar note, some other firm. So they draw the information and establish an overhead absorption rate. So once the overhead absorption rate is calculated, all the items in one go as one category, one item called as total factory overheads is accounted based on the overhead rate. Okay. So in reality, what are the overheads which are incurred would be so very different from what they are accounted for. If they both are same, there is no issue. More or less they are same also, there's no issue, but this can result in difference in the overhead amount. The actual overhead amount incurred is something else, the overheads which are accounted for is something else. See, overheads now, what we have to understand in case of overheads is it is something like a joint cost. It is not only incurred for this particular product. Let's say that there are two products, X and Y, or let's put it as three products, X, Y, and Z. So these overheads are the costs which are incurred for all of them, X, Y, Z. So identifying how much should be charged for each of them is the criteria which has to be taken into consideration. Then if there are n number of items, n number of calculations would be there. If there are 20 overheads, 20 times calculation should take place. But instead, what is assumed is they they calculate, I'm really sorry for that. They calculate an overhead rate, and based on the overhead rate, amounts are charged for X, Y, and Z. Okay. So once they charge it based on the overheads and then add it up, that and the actual total overhead which is incurred when they are compared, they both should match. Fine. Then the amounts which are charged here for product X, product Y, product Z also should be an appropriate amount. It should be an appropriate amount. Suppose, let's see how the overhead rates are calculated. I'm taking you to the PPT. So the PPT has three most common absorption rates which are mentioned here. That is based on the number of units, Meshna rate, or labor rate. Let's take the example as maybe they have taken some rate calculated based on Meshna rate. Meshna rate is applied for all the three products X, Y, and Z. All the three of them, they use this Meshna rate and calculate the overhead amount. Overhead for X, for Y, and for Z. Now, if let's say product X is labor intense product, so which means that it takes lot of labor hours but not machine hours. Y and Z are dependent a lot on machine hours. In that case, what do we see? Y and Z will get more amount of overhead cost than X, because X is using less amount of machine hours. So less amount of machine hours, less number of machine hours into the rate will have a lesser share. But Y and Z, because they are dependent more on the machine hours, they would get a higher portion of the overhead cost. Do you see that what is the flaw in this type of calculation of overhead? Or if they switch to labor hour rate, if they calculate the overhead rate based on labor hours and apply that, X will get a higher share, Y and Z will get lesser share. So we see that there is some problem with assumed rates, assuming certain things as the base and calculating the overhead and recording in the cost sheet. That has some problems. The problem would be about overcharging. More cost is charged or less cost is charged, undercharging. So either the overheads are overcharged or undercharged. That is the major problem which we see in this traditional costing method. If it is clear, you tell me. If it is not clear, I will repeat it once again. If they have assumed to be as anything, these are the common overhead absorption rates. So for recording the factory overheads, for recording the administration overheads, for recording the selling and distribution overheads, certain rates are taken. Now we are right now focusing only until the manufacturing activity, the production activity. So let's focus only on the factory overheads. So if the factory overheads are to be calculated, um, either they can go with the number of units produced, or they can go with the machine rate or the labor rate. So these are very commonly used absorption rates. So one rate is calculated. So let's say that the overhead absorption rate comes out to be as 4 per hour. Then what is done? Take this 4 per hour and multiply into the number of hours machine hours used by X, Y, Z. Then take the number of hours and into 4 per hour gives us what is the overhead. So in one simple calculation, the overhead amounts are accounted in the books of account for all the products. Okay, that results in either overcharging or undercharging. So what is overcharging? Overhead absorbed is more than the overhead expenditure incurred. It is more than the actual expenditure. Then we call that as over absorption. If it is less than what is incurred, we call it as under absorption. Then amount of absorbed overhead is added to profit in the statement of. Then later on there is a reconciliation statement. We will see that little later. But for the moment, if this is clear, we'll proceed further. You want me to explain once again? You express that. I will once again explain that.
No, understood.
Understood, no? Okay. Now, after this, the point is, this is until the cost statement. Now, yesterday we were discussing that from the total number of units available, a part of the units are sold, a part of the units are unsold. So we see that sales happen and also unsold units also would be there. So what is the value which has to be charged? What is the value which is charged to the ending inventory or the closing stock of units? Closing stock of units will have a proportionate value. See, if the units which are sold and the units which are unsold, both of them will have the same amount of the overheads calculated based on the same rate. Rate applied is same. So the rate will include the fixed manufacturing overheads, the variable manufacturing overheads. So those things are taken and uh, proportionately the ending inventory is calculated. Then when we move forward to the marginal costing, so the point of difference is in terms of closing stock. Yesterday also I mentioned, but we couldn't complete that particular thing yesterday because time was over. So the point of difference arises with how the closing stock is valued. Okay. When we come to marginal costing, so marginal costing, the meaning of marginal costing is variable costing. it only considers the variable cost. So the concept of marginal costing says that normally sales minus total cost is profit, but marginal costing distinguishes this total cost as variable component and fixed component, because it says that no matter what is done, fixed cost does not change. So it is irrelevant for decision making. Now that is the assumption, and that is the statement which is made by marginal costing. So it depends on um, another type of profit called as controllable profit for decision making, which can be calculated by deducting variable cost from the sales amount. So this is called as controllable profit, or there's another term which is used called as contribution. And then from the contribution, when fixed cost is deducted, then that resultant figure is called as the profit. The point here, what we are discussing is, when the closing stock is calculated, at that time only the variable manufacturing costs are charged to the ending inventory. So will it be more value or less value charged to ending inventory under marginal costing? Will they be charging more amount or less amount to closing stock?
And what do you mean by that?
Yes, ma'am.
And what does your question mean? Do you mean the value we are assigning as
Value assigned to, let's say that totally there were thousand units are sold, or let's put it as 900 units are sold and 100 units are unsold. If this is the case, 900 units are sold, 100 units are unsold. So we need to know what is the cost which is charged to these 900 units, 200 units, because closing stock is moved to the next period. It goes to the next period as opening stock. So it's not just the units which go to the next period. Along with the units, a value also has to be taken to the next period. What is that value? How do we know what is that value? So for that purpose, in case of absorption costing, these 100 units are multiplied into total. Absorption is total. The meaning of absorption costing is total costing or full costing. The total manufacturing cost, both the variable and the fixed cost per unit is taken, and that is charged to 100 units. But variable costing, it considers only the variable manufacturing cost and it charges to the closing stock. Let's say variable cost per unit is 5. This is variable cost per unit. Fixed cost per unit, let's put it as 4. What's the total cost per unit? It is 9. In case of absorption costing, what is the value of these 100 units? It will be 100 into 9. So that's 900. But in case of variable costing depends only on the variable cost. That is only considered as a relevant cost for decision making. So under variable costing, these 100 units will be charged a value of, what is variable cost? 5. That's it. So variable cost is 5. So the value of ending inventory, this one, the closing stock, is valued as 100 into 9, 900, under absorption costing. Variable costing, 100 into 5, 500. Now, that will have an impact on the profit. That will have an impact on the profit. So that is, what is that impact is what we are trying to understand. I'm using a T form of account because it looks easier. Any form of income statement can be prepared, either a T form or a statement format, whatever it is, the way we want, we can use that. So if we are talking about absorption costing, what will the trading account look like? Under variable costing, what will the trading account look like? Okay. How much did they value the ending inventory? They have valued it as 900. We have the opening stock. It's the same in both the cases. Then we see the material purchases. This is purchases. Then all the other costs which are incurred, whichever method they are using, these would be the same. So in total, we see that the debit side total is the same. When sales are made, the number of units into selling price, under both of them, it would be the same. The number of units sold into the selling price per unit, both of them will be same. Now coming to the closing stock. Closing stock is only 500 under variable costing. But what is closing stock under absorption costing from this example? We understood that from this example, the closing stock under absorption costing is 900. So what will happen to the profit of absorption costing, the gross profit under absorption costing? What will happen? Will it be higher than the variable costing or lower than the variable costing? It's a credit item. So where will we have profit? Profit would be there here on the debit side. So absorption costing profit will be more or less than the variable costing profit.
The variable costing will be more.
Profit will be more. Are you sure profit will be more? Students, please participate. Will the profit be more or less? Why would it be more? Why will it be more?
And because there's a difference.
Because that is, yeah.
Because the value of the closing stock is more, that means that you have more leverage. So your gross profit will be more.
So it is a kind of a reduction in the cost. Closing stock is reduced from the total cost. Or the treatment wise, it is something similar to be, or it is on par with the revenue. It is not a revenue at all. It is only an adjustment of the cost. But we see that the treatment is something, because it's there on the credit side, we see that it is something similar to the impact what the sales has. It is a reduction in cost. So when it is a credit item, the credit items have an impact on the gross profit. If the credit side is more, gross profit is more. If the credit side is less, the gross profit is less. Do you see the point of difference there? Okay. So the profit is more. What about the ending inventory? Ending inventory is more in case of absorption costing. Profit is more in case of absorption costing. And this is carried forward to retained earnings. Retained earnings also will be more. But in case of variable costing, closing stock is less, profit is less. Okay, profit is less, and the profit which is carried forward to the retained earnings also is less. Why do you think is less? Apart from closing stock, is there any other logic which we can think? Closing stock part is fine. Closing stock part is fine, but is there any other point of difference which you see that why the profit would be less? Another explanation I want.
Because in marginal costing, they are trying to, they're only trying to take into consideration things they can control. They don't want to unnecessarily inflate their accounts. So it looks like the gross profit is less, but actually it shows a more accurate picture of the accounts.
No, I have, okay. I mean, that's one way of interpreting, but the logic I am talking about, see, closing stock is less more, therefore that is there in as an impact. Here, the total cost, variable and fixed cost, all of them are recorded on the debit side. Okay. Out of that, this is an adjustment of the cost which are incurred. Closing stock is an adjustment of cost which is incurred. So from the total cost, a part of it is taken to the next period. So that cost is not deducted in the current year. If the cost is deducted, then profits reduce. A major part of the cost is taken to the next period. Therefore, profit, the less costs are deducted, profits are more. Both the variable and the fixed cost, both of them, a portion of that is charged to the ending inventory, carried forward or deferred to the next period. They are not deducting in the current period. When they are not deducting in the current period, less amounts are deducted in the current period, profits would be more. Whereas variable costing is carrying forward only the variable manufacturing component, only that is taken to the next period. The total amount of fixed manufacturing cost is deducted in the current period only. Higher amount of costs are deducted because it is taking this 500 consists of only the variable manufacturing cost. It doesn't have the fixed manufacturing component at all. It is only the variable manufacturing component. So what did they do with this 4? So that 4 per unit, that is completely included here on the debit side. Greater portion of costs are deducted on the debit side. So the profit is reducing. Okay. So there is a point of, there is a difference in the profit which is earned under absorption costing and variable costing. So first thing, what are the assumptions of absorption costing? We started on that note. How is absorption costing prepared? Is absorption costing in the cost statement, instead of dividing all the overheads and distributing them to all the products which are produced, taking up all the calculations to simplify the task, all of them are counted as one item, the total factory overheads. A rate is calculated, assuming that rate, the costs are charged in the current period. So after charging these costs based on the overhead absorption rate, then the same rate is also applied for valuing the ending inventory. Now this could result as as a costing technique. It has certain advantages and disadvantages. This can result in over absorption or under absorption. More is the cost which is charged, that will have an impact on the sales. Higher cost, higher selling price will have an impact on the demand. Lower cost, lower selling price will also have an impact on their profitability. So there are advantages and disadvantages with that. So charging of overheads more than it is incurred or less than it is incurred has certain advantages and disadvantages. So the same cost per unit, the overhead rate is taken and it is charged for the ending inventory as well. So it is kind of proportionately, it is using that total cost between the cost of units sold and the cost of units unsold. Then we see that variable costing follows a different method altogether, wherein they only consider what is the variable manufacturing overhead to be charged to the ending inventory. Okay, I think we should take up a numerical question to understand it better. So I'm taking you to the examination kit. Quickly, let's maybe we'll start with the first question, though it is not absorption costing. There are 200 odd questions. Today's class I'm starting with question number 1, but all the theoretical, this simple MCQs which are there, you take it up. The numericals which are there, as many as possible during these 40 hours training sessions, we'll take up as many as possible and then solve these questions. Okay, so this is the examination kit which is there. This examination kit, question number 1 says, which of the following is not one of the main purposes of management accounting? Quickly, can you tell me?
Reporting.
Which one?
Reporting.
Reporting. Voice is breaking. That's why I'm asking you which one. Then do the comments below relate to management of financial accounting? Very quickly, let's look into that. Uses only historical data. Financial accounting uses only historical data. Is carried out at the discretion of management. Helpful for the management, it is management accounting. Uses non-financial information, both financial and non-financial. But whereas financial accounting uses only the financial information. Aids planning within the organization, management accounting. Done. Which two of the following would normally be carried out by strategic level management? Strategic level is the top level. The top level, what does it decide about it? In the hierarchy of an organization, there are 3 levels. I don't know whether I mentioned it yesterday. We got a chance to look into that, but otherwise also I'm telling you. In the hierarchy of an organization, there are 3 different levels. The strategic level, the middle level, which we also call it as tactical level or management level. The strategic level, top level management. Second one is the tactical or the management level. The third level is the low level, or we also call that as operational level. What do the top management or the strategic level decide? It takes decisions for the entire organization in terms of what are the products which would be produced and which markets would these products be sold. So it is I mean, the decisions relate to the entire organization. It is not only to one particular unit or department or cost center or anything. No, it involves the entire organization. The planning is taken up for the entire organization in terms of what are the products and services which the company will produce and the markets where these things would be sold. So that is the basic planning. But at the middle level now, the top level has already decided what would the organization as a whole take up. But let's say that if they have decided to sell um, 5 lakh units of product X, okay, then how to, just because it is decided that 5 lakh units of product X will be sold, uh, will things work out in that way? Then planning has to be taken up. How would they actually produce 5 lakh units and keep it available for the customers to purchase? That decision, that planning has to be taken up. Who would take up what role? How would they plan? And then see that whatever is the plan by the top level, um, it can be effectively implemented. So the planning at the internal level, middle level takes care of that. So middle level is also called as tactical level. Then the final, we see that it's at the operational level who are involved in implementation. So they implement whatever is planned by the middle level. So they are kind of experts in their own field. Each one of them working is their work relates to only one particular area, specialized area. So somebody working in tax would be looking after tax. Somebody working in law will take care of the law related issues. Okay, so these are the 3 levels of management. So the question is asking us which two of the following would normally be carried out by the strategic level management. Strategic level management, and we have to select 2 options. First one says making day-to-day decisions about running of a department, defining the objectives of the company, deciding in which markets to operate, deciding about how to compete within their chosen markets, and about inventory control. You can also type it in the chat box. So anything which you want to answer, you can also use the chat box to type your answers.
1, 2, and 3.
So what do we have? Two is defining the objectives of the company. 3 is deciding in which markets to operate. Day-to-day decisions is by the middle level or the operational level. They look into day-to-day activities. Deciding about how to compete with their chosen markets is the middle level. Inventory control is at the operational level. So 2 and 3. Direct costs are what are direct costs? Costs which can be identified with a cost center but not identified to a single cost unit. B is the right answer. Cost which can be economically identified with a single cost unit. This graph relates to which one? Which of the following descriptions best suits the graph? Is it total fixed cost, total variable cost per unit, fixed cost per unit? So we know that the total fixed cost remains fixed. The total fixed cost is the same from zero number of units until the maximum capacity. Total variable cost varies proportionately. So none of them match with this one. We see that from the explanation, it is not total fixed cost, it is not total variable cost. Then we are left with um, variable cost per unit and fixed cost per unit. Okay. Variable cost per unit will be the same. So this graph shows a trend of falling down. Do you see that? The graph is falling down as the number of units produced are increasing. The activity level, when it increases, we see that the cost per unit keeps decreasing. It is possible with which type of cost? Because we see that the total fixed cost is same from 0 till the maximum number of units. As the number of units produced keeps increasing, cost per unit keeps decreasing. Let's say fixed cost is 10,000. Initially, the number of units are 100. So 10,000 divided by 100. Is it 100 or 1,000? 1,000. Okay. So it would be variable cost per unit would remain the same. Every single unit which is produced, it will have the same value. So the one which best suits this particular graph is fixed cost per unit. Assume that initially it is the total fixed cost, if it is 10,000, the number of units, let's start with 100. So how much is the fixed cost per unit? I'm really sorry. Fixed cost per unit will be 2 zeros are gone. It would be 100. Okay. Then let's say that the output, the total number of units are increasing. What if it becomes 500? So 10,000 would be the same. It is the same throughout. So 10,000 divided by 500 will become how much? 500. That will be 20. If it further increases, it will further fall down. So then here fixed cost per unit will be 20. So we see that this is the best suited answer. Which of the following would be classified as direct labor? What is the direct cost? Direct cost is a cost which is identified with the cost object. Cost object could be a product, a service, or anything. Okay, a unit, or a center, or department, an activity. It could be anything. Um, there are four things which are given: a HR manager in the company servicing cars, builder in a construction company, general manager in a DIY shop, maintenance manager in a company producing cameras. So which of them is should be classified as direct labor? Direct labor,
Builder in
that
a construction.
builder in a construction company.
Yes.
Yeah. The rest of them, a manager is not only looking at a HR manager is not only focusing on car servicing activity, he focuses on every other activity in that car company. He's a HR manager. So his services are not only identified with servicing cars. General manager also on a similar note. Maintenance manager in a company producing cameras. Maintenance is in terms of so many other activities. So therefore, we cannot call any other salary cost as direct labor, but a builder in a construction company, as much work he takes up, his wages would be accounted for. Okay, those are very basic questions. So quickly we've run through that. Now coming to the traditional costing, so the point of what we are discussing from yesterday about absorption costing. A business reported a marginal costing profit of 45,000 last period. It's I want all of you to make a note of the answers in your notebook so that you will understand what is the logic behind each question. Then you will be able to do well in the examination also. I know that answers are there. You can take the help of the answers, but right now all of you work it out in your notebooks along with me, because I will also be doing the calculations on the screen. So I want you also to work it out. Traditional costing, seventh one. A business reported a marginal costing profit of 45,000 last period. Its inventory values for the period were as follows. The opening inventory is 16,000, closing inventory is 20,800. If the business had used absorption costing, the inventory values would have been as follows. The opening inventory would have been 28,000, closing inventory would have been as 36,400. What would have been the reported profit using absorption costing? So from the variable costing, that is marginal costing profit, we have to come to the absorption costing. So a reconciliation statement is what has to be prepared. So I will put the solution in the Excel file. So the questions which we will be working, the numericals, I will put them in the Excel file. Okay, 48,600 is the answer. Okay. Profit as per marginal costing is 45,000. The difference is because the difference in the profits as per marginal costing and absorption costing is because of opening inventory and closing inventory. That is what we see. The opening inventory is 16,000 under marginal costing and 28,000 under absorption costing. So we see that there is a difference in that. 16,000 there and 28,000 here. So there is some difference. How much is the difference? So 4, 8, 12,000. Isn't it 12,000? So the opening inventory under marginal costing was undervalued. Okay, it was undervalued in case of marginal costing. So what do we do? What is the easiest way to remember what has to be done? In case of closing inventory, it is 20,800 and 36,400. 36,400 is more, more, so 16. So is it 15,800? No, 600. How much is the difference? The opening inventory is the difference between 28,000 minus 16,000. What logic do we apply here? Should it be added or deducted is what we have to see. So that difference amount is 28 minus 16 is 48. This is 12,000. So should it be added or deducted is what we will discuss. Then coming to the closing inventory, the difference is 15,600. Should we add it or deduct it? What should be done and what is the logic? What is the logic? What should we do? So if we are talking about the variable costing and if we are talking about absorption costing, Absorption costing has accounted as more amount of opening cost, opening stock, which is 28. But variable costing has accounted only 16,000 as the opening stock. So they have deducted less cost. This is a cost. Opening stock is a cost in the trading account. They have deducted less cost, but absorption costing has done more amount of cost was deducted. So now that we are arriving at the absorption costing, this is only a reconciliation what has to be done. So now that we are taking up that, so whatever the treatment was done under absorption costing, same should be the logic here as well. So because they have reduced less, they have accounted as less cost than the absorption costing. So to be on par with that, as much as was deducted in absorption costing, we also have to deduct. Since already 16 was deducted, the balance of 12,000 has to be deducted. So here the logic what we have to apply is less. So this 12,000 will become minus 12,000. So obviously it would be the other way around in case of ending inventory. Ending inventory should have been 36,400 according to the absorption costing, but they have recorded only 20,800, 20.8. But whereas it should be 36.4. Already since 20.8 was taken on the credit side, the balance of it has to be accounted. Because it is a credit item, we are adding it. The difference is 15,400. So just add them up. So 48,600 is profit as per absorption costing. I hope it is clear to all of you. This is profit as per absorption costing. It is a reconciliation what we are preparing to ensure that the profit as per these two statements, these two types of costing techniques, when reconciled, equal each other. Then coming to the next question. So 7th is what we've done just now. Let's take up 8th, 9th and 10th. All three I'm taking to Excel sheet. A company has a budget to produce 5,000 units of product B in December. The budget for December shows that for product B, the opening inventory will be 400 units and the closing inventory will be 900 units. The monthly budgeted production cost data for product B for December is as follows. Variable direct cost per unit is 6. Variable production overhead cost per unit is 3.5. Total fixed production overhead costs are 29,500. The company absorbs overheads on the basis of the budgeted number of units produced. The budgeted profit for product B for December using absorption costing is, see, all the options which are given are as a comparison, would be lower than marginal costing or greater than marginal costing. So in simple terms, without even asking, they're asking us to find out what is it under absorption costing, what is it under variable costing. So there is no direct mention that it has to be calculated for both of them, absorption as well as variable costing. That is not asked, but because the options are indicating that, we also have to use the absorption costing as well as the variable costing. So let's start working out the solution. The question is a very big one, but is the answer also so big is what we have to look into that. Absorption variable. What is the main point of difference? I told you the main point of difference would be in terms of what?
Value of closing stock.
Value of closing stock, wherein the fixed overheads are charged to the closing stock in case of absorption costing. Fixed overhead costs are not charged to the value of ending inventory under variable costing. So that's all is the difference. That is the point of difference. The rest of it is all same under both of them. So that point of difference. So how many units are as ending inventory? First, let's identify how many units are there as ending inventory. The budget for December shows that for production for product B, opening inventory is 400, closing inventory will be 900. So whatever is the closing inventory which is charged will go to the next period. Similarly, from the previous period's closing stock will come to the current period as opening stock. Fine. The difference is in terms of what is the fixed overhead cost which is charged. So how much is total fixed overhead cost? This is incurred for how many number of units? 29,500 is the total fixed production overhead cost, which is incurred for how many total number of units?
5,000.
5,000. That's right. Very good. So this was incurred for 5,000. How are they charging their overhead costs? They are charging their overhead costs on the basis of budgeted number of units produced. So every single unit will be charged with the fixed overhead cost also. So let's first figure out. $5.9 per unit is 5.9. Opening inventory is 400, closing inventory is 900. On the debit side we have 400, on the credit side we have debit side we would be accounting for 400 and credit side we would be accounting for 900. So the overall difference in the number of units is about 500. The impact will be in terms of 500 units. I hope all of you are able to follow. I am not getting any response from others. Only one or two students are responding.
Yes, ma'am.
You're
Yes,
able to
ma'am.
follow, no? If you're not able to follow, please stop me at any given point of time. Please feel free. So this 5.9 has to be applied for 400 units, write it on the debit side. 5.9 has to be applied to 900 units, write it on the credit side. So in total, the impact is instead of writing 400 into 5.9 on the debit side, 900 into 5.9 on the credit side, we can only write the difference in these units 400 and 900. So difference in profit would be about 900 minus 400 into 5.9. So that will be 500 into 5.9. 2,950. Done. 2,950. Which one will have more profit? Which one will have less profit? We've already discussed that. Which accounting technique will have more profit? Which accounting technique will have less profit?
Absorption
Absorption
costing.
costing.
Absorption costing will have more profit. Okay. And variable costing will have less profit. So now from this calculation of 2950, the answer is there either in A or B. It is not in C and D. So A or B. So which one is the right one?
B.
B. 2,950 greater than it would be using marginal costing. Lower than it would be using marginal. Okay. Come to ninth question. A company operates a standard absorption costing system. The budgeted fixed production overheads for the company for the latest year were 330,000 and budgeted output was 220,000 units. At the end of the company's financial year, the total of the fixed production overheads debited to fixed production overhead control account was 260,000 and the actual output achieved was 200,000 units. The under over absorption of overheads was the following absorption costing system. The fixed production overhead for the company for the latest year were 330,000 and the budgeted output was 220,000. The total overhead cost was 260,000 and the actual output achieved was only 200,000 units. Let's first calculate what is the overhead absorption rate. The total overhead costs are we see that there are two different amounts. The first amount is 330,000. The budgeted fixed production overhead for the company for the latest year was 330,000. But from the accounts, they have understood that the overhead amount was only, it's not 330,000, but it was only 260,000. So there are two different figures. We are talking about based on some assumptions, the overheads are charged. They do not verify whether what is the actual amount of overhead. When they are accounting for overheads, they do not verify about what is the actual overhead incurred, but based on either from the past data or some estimations or some other firm in the industry taking the data from them. So no matter what it is, they do not usually go with the actual overhead incurred, but they take it based on the certain other information. So 330,000 is the budgeted fixed production overhead. So if that is the case, and the budgeted output was 220,000, so we go ahead with that only. The overhead rate will be 330,000 divided by 220,000. So tell me how much would it be? 330. So it is 1.5 per unit. So how much overhead was did they charge? That is what we have to look into. How much overhead did they charge? They would be charging the overheads at the rate of 1.5 per unit. The actual amount of overhead which was incurred was $260,000, and the actual output achieved was only 200,000 units. So overhead charged, how much would it be? They have produced 200,000 units. Each of them will be charged with the rate at the rate of 1.5. So that will be 300,000. But what was the total amount actually incurred? We see that it is 260,000. So there is a difference between these two. The difference is 40,000. Is it over or under? How much did they charge? They charged more than what is actually incurred. So that's called as overheads over absorbed or under absorbed.
When we charged to like 60,000.
260 is incurred. Spent amount is only 260, 260. But they're accounted for 3 lakhs. They have accounted for 3 lakhs, but they incurred only 260. So they have absorbed more amount of overhead. So this would be over absorbed. That's right, Nida. So this will be over absorbed.
Ma'am,
Yeah.
actually, I have a doubt.
Yes.
Ma'am, that about 3,30,000, is it an estimation or is it based on the previous year
Estimate.
figures, ma'am?
Estimate. Here, I mean, it could be anything, but very specifically, it is an estimation given mentioned here. Budgeted means budgeted are estimates, plans. So they have planned that budget would be 3,30,000 for an output of 2,20,000. So the rate will come up to be as 1.5 per unit. So rate will be 1.5. But when they have actually implemented the plan, they were able to only produce 2 lakhs units. So for 2 lakh units into 1.5 is the rate which is recorded in the cost statement. So accounting wise, they have accounted as 2 lakhs into 1.5, but in reality, they have spent only 260. Okay. So your question is, it is not based on the past, it is based on the future estimation.
Okay, ma'am. Now I understood. Thank you, ma'am.
Okay. So answer is A. Then 10th one says that a business manufactures a single product which sells for $45 per unit. The budgeted data for the latest period are as follows. We see production and sales volume is 2000 units, material cost, labor cost, production overhead, non-production overhead. Actual production volume and costs were as budgeted for the period, but the actual sales volume achieved was 1800. There was no inventory at the beginning of the period. The profit for the period under absorption costing is. So we need to actually prepare a statement to understand what is the profit under absorption costing. So that is what we have to take up. The question is about what is the profit. How do we get what is profit? Take the sales value minus all the costs which are incurred. So that is how we find out what is profit. How many units were sold? The production and sales volume is 2000 units. So all the units will be sold each at 45 per unit. So that will give us what is the sales value. But the point is there was no beginning inventory. So there was no inventory at the beginning, indicating that there is an ending inventory. How do we understand that? They produced 2000, but they were able to sell, but the actual sales volume achieved was only 1800. So the sale took place only at 1800 units. So sales value has to be recorded, which will be 1800 into 45 minus all the other costs also. So let's start with that. Income statement under absorption costing. So let's start with sales. Sales, how many units did they sell? They sold only 1800. Into selling price per unit is 45. So that comes up to then from this we have to deduct less cost. There are four items which are given. One is material cost, then labor cost, production overhead, non-production overhead. First three are production items. Last item is a non-production. So non-production cost will not be charged to the ending inventory. Only the production cost will be charged to the ending inventory. So that point we have to have it very clearly. Non-production, non-manufacturing costs like administration, selling and distribution are in no way connected to the production activity. Therefore, those costs have to be accounted separately. Production costs have to be accounted separately. They are not connected with each other. See, when there is maximum output produced also, administration, selling and distribution will be incurred according to what activity they are taking up. When there is no activity also, cost will be incurred. Okay, so they are not connected. So we would not consider the non-manufacturing cost for the purpose of charging value to the ending inventory. Ending inventory is only at the factory level. Fine. So ending inventories for 200 units, sold units are 1800. Now, three manufacturing costs we have. One is material cost, direct labor cost, and production overhead costs. Fine. Now, these three costs are incurred for the total output of 2000. So when we add them up, just tell me what is the total value? 13, 5, 24, 25,
57,700, ma'am.
57,700. we need to calculate it proportionately for only 1800 units. So this 57,700 is for how many units? 2000 units. We want it only for 1800 units because the units sold are only 1800. So for 1800, how much is that? So proportionately, if you calculate, that would be 5. So 1800, how much would be the manufacturing cost? That's the logic. So 57,700 into 1800 divided by 2000. So here it says that less. So how do we do that? This would be is equal to 57,700 into 1,800 divided by 2,000. So 51,930. So when we deduct this from sales minus the manufacturing cost, this is gross profit, isn't it? Gross profit is 29,070. After that, less non-production overheads. All of them are deducted. There's another term which is used for non-production overheads. They are also called as period costs because they are usually incurred for a period of time. They are not dependent on what is production. Rent is paid for 1 month. Salary is paid for 1 month. Taxes are paid for 1 year. So they are incurred based on a period. They are not incurred based on the output. So when we are preparing income statement for a period, all the non-production overheads should be accounted for that period. We have to deduct them. This is profit. Profit, net profit as per absorption costing. It is not asked, but shall we try with the variable costing? Of course, it's not asked here. For the same set of data, shall we try it out with the no, we cannot. We do not know the fixed portion of that. So we cannot try that for the variable costing because fixed portion is not known. Okay. Is this clear, all of you? Did you understand any doubts anywhere at any given point of time? If it's clear, let's get back to the we have 12th question. No, the same set of data. Okay. I will write it here. Everything is same, no? 13, 5, 11, 8. 13, 5, 11, 8. Yeah. Okay. So let's start with technically the data is the same. So we are doing this one. This is solution number 10. This is solution number 12. Okay, the same set of data. There's no mention about which one is a fixed overhead. By default, material and labor. Is there a placement drive going on in your college? So material cost and labor cost are variable costs. There is nothing mentioned about what is fixed cost. So we go ahead because their details are not given. We assume that production overhead is a fixed overhead. Okay. So let's start working out and find out what is the income, net income or net profit under variable costing. So let's start with so now we less variable manufacturing costs. Only two items are there. 13,500 and 11,800. That has to be taken for 1,800 units. So we need to take 13,500 and 11,800 proportionately for 1,800 units. So already the logic I explained to you. So I think this will be 25,300. The logic will be these two together, it is 25,300 for 2,000. 25,300 is for 2,000 units. So for 1,800, how much? So if we have to calculate it for 1,800, how much? That's the proportionate amount. So we have 25,300 into 1,800 divided by 2,000. Okay. So sales minus variable cost, a term which is used is called as contribution. So contribution would be now we have to account for less fixed cost. So both there are two items of fixed cost. Under this we have one item as production overhead fixed, non-production overhead is also fixed. So fixed cost will be the two items which is 32,400 plus 21,900. So check that. Even after the class also, you spend some time in, see, the solutions are there with you, but let the logic sink in your mind. It is not just very simply it registers in your mind. Okay. So we have more questions here. So we have more number of questions after that also. Were you able to see the Excel file till now? Were you able to see the Excel file? Was
No,
the
ma'am.
Ma'am, the last problem we did.
you should have told me, no? See, when we are shifting from window to window, we may not be, I mean, doing it sometimes assuming that we've shared it and that share doesn't go. So if you are not able to see the Excel file, you should please inform me. I was assuming that you are able to look at the Excel sheet. I was scribbling on the screen. I was adding up the total like these two things are added. So this is equal to 2000. So 1800 is how much? So that is how I was writing. If you were not able to see the Excel sheet, you should have told me. Okay, next time onwards. Because when we shift from one window to another window, accidentally we would not click on the share option. So then the page becomes static there. Okay, um, please look at the solution here under for the 12th one under variable costing. What is the solution? So solution looks like this one. Sales is 1800 into 45 less variable manufacturing cost, which is 25,300 into 1800 divided by 2000. We have it as 22,770. That's called as contribution minus fixed cost. There are two different fixed costs. One is production overhead and another one is non-production overhead. Add them up, it is 54,300. When that is deducted from the contribution, we have the profit as per marginal costing, which is 3,930. There are a few more questions. We'll go to the question examination kit. So we see that we have more questions. We've done till 12. 13 is there, 14 is there, 15 is a theory, 16, 17. Okay, there are another 5 questions. Please give a try. Okay, try to work it out. If not even one question you're able to solve, also perfectly fine. But you please try. Come back tomorrow to the class, and we will, if any difficulty you are facing, we'll discuss that in the class and then take it up. Even if none of you get that also, it's fine, perfectly fine, but please attempt. So now the rest of the time I'll start with the next topic, which is activity based costing.
Ma'am, you want
Yes.
us to do 13 to 18?
All of them are absorption variable costing questions only.
No, ma'am, we don't have this exam kit.
You will get, you ask your coordinator.
Okay.
What did you get as a part of the kit?
No,
Did you
ma'am, we
receive?
haven't received it for this module. We received it for the first level and then we received the E1 kit.
Okay, so actually we generally share. There is no issue about it. Recently, we were instructed that Kaplan has come out with an issue that um, the soft copy of the PDFs are circulated among the students through mail and WhatsApp and all. So this was highlighted in one of the meetings. Otherwise, we were very open to sharing that, because you are our students only, so we wouldn't mind that. I'm not sure about it. Let me get back to you on that. If it is okay that I can share that, I will definitely. And otherwise, also we ensure that you get the copy. If not from my account, from the official account only, you will get it. So if you do not have that, okay. So I'll put these questions 13 to 18 on hold until you get the material.
Okay, ma'am. Thank you.
Did you ever learn about activity-based costing? The next costing technique is activity-based costing. Now that we have discussed about absorption costing, the way the overheads are charged, they do not consider about what is the actual overhead incurred, but account for the overheads based on some overhead absorption rate. This overhead absorption rate, in one of the examples we've seen, it had over absorbed. The absorption of the overheads can be more than what actually is incurred, or it could be less than what actually is incurred. So there is a limitation, there is a disadvantage in terms of charging the overheads as over absorbed or under absorbed. So that will have an impact on the profit. If the overheads are over absorbed, selling price is equal to cost price plus profit. So when the cost itself is more, selling price also will be more. Okay. So when the selling price is more, we know what is the danger with that. Customers choose a manufacturer who can offer the product at a cheaper price. So the customers will move to their competitors' products. So demand will fall, sales fall, and profit also will get impacted. If there is over absorption, it's not necessary that every time there would be over absorption. There is a possibility that the overheads are under absorbed. That situation also could be there. What if the overheads are under absorbed? Then the cost price is less, selling price also would be less. When the selling price is less, do you think that the customers will come back? Yes, the customers will come back, but yet it is a disadvantage for the business, because sometimes it will not be even recovering the actual cost incurred. If they are under absorbing it, if it is far below the actual overhead cost incurred, then the selling price which is decided, the revenue which is generated, will not be sufficient enough to recover the actual overhead cost incurred. So both of them have a disadvantage, whether it is over absorbed or under absorbed. when the costs are overcharged or undercharged, it is a disadvantage or for the business in terms of losing their customers or having an impact on their profitability that the costs are not recovered. Okay. If in this situation we have a modern costing technique, advanced costing technique, modern costing technique, whatever you call it, that is called as activity based costing. So it suggests that whatever the traditional costing system was not doing, wherein they were accounting all the overheads as one item based on a predetermined overhead, ABC suggests that instead of doing it as one item of calculation, one overhead amount charged to the cost statement, instead it suggests that why are the costs needed to be incurred? What are the costs incurred for? What are the activities for which the costs are incurred? Based on that, the overhead should be charged. Of course, it is a time taking procedure, but this will result in appropriate amount of overhead cost to be accounted for. The right amount of cost can be charged. So there are 5 steps mentioned under ABC. Based on these 5 steps, the correct amount of overhead cost can be charged to the income statement. First step. The first step talks about first identify what are the activities for which the overhead costs are incurred. Step number 1, identify the activities. Activities like repairs, maintenance, power supply, then material is moved from one place to another, material movement, moving, assembling, inspection. These are examples what we have, right? Um, so the overhead costs are incurred for these activities. So how many activities are needed in the production process? First step, identify what are the activities. Second step talks about allocate the overhead cost to the activities incurred. But then doesn't happen immediately. So here we should understand that after the activities are identified, next step talks about, actually this should come, um, the next step is for every activity there should be a cost driver which has to be identified. What is a cost driver? So there is a definition given about what is a cost driver. It says cost driver is a unit activity that consumes resources, any factor which causes a change in the cost. No matter what the definition says, I'll put it in simple terms. Cost driver, you can take it as basis of apportionment. If, for example, if we are talking about repairs is one activity. So for repairs, after the activity is identified, every time whenever repair work is taken up, all the costs have to be pulled up. That is in the some point it is given. So okay, the total amount of cost incurred for repair will be totaled up during a period. Every time repair activity is taken up, every time cost is incurred for repair activity, the cost is pooled up in an activity cost pool called as repairs. Repair activity, under that, the total amount is accumulated. After that, this total amount has to be charged among the products A, B, C, whatever are the products which are produced. So this total repair cost has to be charged to the products. So at the time of charging it, we have to have a basis of apportionment. If we are talking about repair cost, how would we charge that? Based on the usage. Based on the usage would be, in this example, how many repairs were needed by each of the products. So product A required 2 repairs, product B required 3 repairs, product C required 4 repairs. So the total repairs cost incurred during a period will be charged to A, B, and C in the ratio of 2:3:4. So in simple terms, if we put it, um, uh, cost driver is the basis of apportionment to charge the overhead cost. Now, how are we deciding? We are deciding based on the usage of that activity cost. Now, the cost driver can be put it as the activity usage, a unit activity that consumes. Here it's given as consumes resources, or usage of resources. Okay, so A required 2 repairs, B required 3 repairs, C required 4 repairs. So the total repair cost will be charged based on the ratio of 2:3:4. So that usage of repairs, the number of repairs, that becomes a cost driver. So for every activity, we need to identify the usage, that is the cost driver. Cost drivers have to be identified. So first activities are identified. Then we need to identify what are the cost drivers. Pull up the amount. Add up, accumulate the total amount of activity costs which are incurred. Finally, these costs have to be allocated to the products based on the cost driver, basis of apportionment. Or in other terms, we can also call it as, like the absorption costing calculates the overhead rate, here we calculate activity overhead rates based on the basis of apportionment or activity overhead rates. The costs are allocated. The advantage with ABC, I'm sorry. The advantage with ABC is the appropriate amount of overhead cost will be allocated. Okay. Better information, better cost control, better pricing, fairer overheads in units. But the disadvantage is it's time consuming. Time consuming. Someone has to be involved with looking at how the cost should be allocated. It is time consuming and expensive. Okay, still some arbitrary allocations need best cost driver. So this can work out only when the appropriate cost drivers are identified. If they cannot be identified, then in that case the whole activity will be a waste thing. The suitable, most appropriate activity cost drivers, only when they are identified and used, the appropriate amount of overhead cost will be allocated. Okay, so that is activity based costing. Shall we look into one simple question from the examination kit?
Okay, ma'am.
Question. So question number 20, from 19 onwards, the questions have started. Question number 20 says P operates an activity based costing system to attribute its overhead cost to cost objects. In its budget for the year ending 31st August 20x6, the company expected to place a total of 2,895 purchase orders at a cost of $110,010. This activity and its related costs were budgeted to occur at a constant rate throughout the budget year, which is divided into 13 4-week periods. During the 4-week period ended 30 June 20x6, a total of 210 purchase orders were placed at a cost of 7,650. The over recovery of these costs for the 4-week period was. First, let me paste this in the Excel file. Today only 4 are there. How do I pronounce your name? Liu.
Leave the farm.
Okay. Someone prominent? Your name is named after somebody.
No, ma'am. Not like that.
Okay. Okay. Just like that, I've asked. Who's not there? Yesterday, someone else also was there. Okay. It's okay, fine.
Ma'am, Gracia is missing.
Yeah. That's right.
Ma'am, and Karthika joined, but I think she got disconnected.
Okay. No, everything will get counted in the attendance. Zoom has an attendance provision. So auto recording of the attendance, how much time they were there, all that. In earlier we used to manually account for that and all, but now they are taking the records from Zoom and accounting. Okay, so this is the question we have. What does the question say? In its budget for the year ended ending 31st of August, so the total of 2,895 purchase orders at a cost of something is given. The activity and its related costs were budgeted to occur at a constant rate. Now, so they divided that 52-week period as four slots, each slot consisting of 13 weeks. Then during the 4-week period, 13 slots of 4-week period. During the 4-week period ended 30 June 20x6, a total of 210 purchase orders were placed at a cost of 7650. So first let's calculate what is the overhead rate. The cost incurred is 110,010. The total number of orders are 2,895. Fine. After that, we see that during this the time period which is divided, during that whatever that 4-week period, we see total of 210 purchase orders were placed. So we need to calculate what is the overhead amount. Okay, let's start with it is 38 per order, per purchase order. Now we have to charge the overhead. overheads absorbed are rate is 38. During this 4-week period, how many purchase orders were placed? The total purchase orders placed during this 4-week period is 210. 210 into 30, 38. But what a total of 210 purchase orders were placed at a cost of 7,650. So the over recovery of these costs for the 4-week period was the difference. So this is 7,650. Okay, so the answer is A. Okay, I hope you have these concepts clear. There are still some more questions which have to be worked out in absorption costing. So whenever you get the material, you do the homework. If you are unable to do, yes, we will again work it out in the class. So that's no issue at all. You don't have to be worried about that. We can also work it out in the class. So we'll continue with ABC in tomorrow's class. Okay. Any doubts?
No.
No, ma'am.
Okay. Okay. In that case, we'll end the class here. Good day.